Tesla. Let's be honest, you can't escape the name. It's everywhere, in the headlines, in every debate about the future, and it takes investors on one heck of a wild ride. It's easily one of the most exciting and, yeah, confusing stocks out there. So today, we're going to cut through all that noise. We're going to figure out what's really driving the hype and whether it's actually justified. And really, it all boils down to this one single question. Is Tesla just a car company that uses some pretty cool tech? Or is it a revolutionary AI and robotics company that just happens to be making cars for now? Because how you answer that question, well, it changes everything about what you think this company is actually worth. And the stakes? They could not be higher. I mean, just look at this number. We are talking about a market capitalization of $1.4 trillion. To put that in perspective, that's more than almost all the other major car manufacturers combined. A valuation that huge means we absolutely have to understand what Wall Street thinks it's buying. So here's how we're going to break it all down today. First, we'll dive into the bull case. That's the argument for why the potential here is pretty much unlimited. Then, we're going to switch gears and cover the bear case, a much-needed reality check. And finally, we'll wrap it all up with the key takeaway for you as an investor. All right, let's kick things off with the bull case. This is the optimistic view. This is for the people who believe you're not just buying the Tesla of today, you're investing in the world-changing, science fiction made real Tesla of tomorrow. So the most important thing to understand for the bulls is this. It's not about the cars, not really. Think of the cars as just the beginning. They're the hardware, like iPhones on wheels that are going to run the really valuable stuff, the software, the AI, and the data. The car business, that's just funding the real mission. And that mission, that grand vision, it really rests on three gigantic pillars. First, you've got full self-driving, or FSD, which aims to turn every Tesla into an intelligent, autonomous machine. Second, a global robotaxi network, a potential multi-trillion-dollar market where your car could actually go out and earn money for you while you sleep. And third, the Optimus humanoid robot, a product Elon Musk himself thinks could be bigger than the entire car business. And look, this isn't just wishful thinking. You've got prominent Wall Street analysts, like Dan Ives, putting some serious numbers behind this vision. He estimates that the AI and autonomous driving part of the business, just that piece alone, could be worth $1 trillion. That right there is the heart of the bull case. And let's just take the Optimus robot for a second. Goldman Sachs sees a $38 billion market, which is huge. But Tesla's real play here is disruption. See, competitors are building these things for over $100,000 a pop. Tesla, they're aiming for just $20,000. Now, at that price, a robot suddenly goes from being this massive one-time investment to a simple operating expense. And that makes mass adoption a real possibility. That's how Tesla thinks about scale. Okay, so that's the dream. It's big, it's exciting. Now, let's get a dose of reality. It's time for the bear case. And this argument isn't really about whether the dream is possible, it's about whether today's stock price has already gotten way ahead of itself. The bears are focused on three really critical risks. You've got intensifying competition in the EV market, an extreme stock valuation that leaves absolutely no room for error, and a long history of really ambitious promises that, well, they haven't been fully delivered on yet. First, let's talk competition. This is no longer a one-horse race. In Europe, which is a super important market, Tesla's sales have actually dropped by a third this year. Meanwhile, a competitor from China, BYD, saw its sales nearly triple. Tesla's dominance is not a guarantee anymore. Next up, the valuation. Tesla's stock trades at 166 times its expected future earnings. What does that mean? Well, to put it in context, a traditional car company like Ford trades at less than 10. It means investors are paying an enormous premium today because they're betting on decades of perfect, flawless growth. There is zero room for mistakes. And that brings us to what might be the biggest risk of all, something called execution risk. For Tesla, this is all about the massive gap between the brilliant promises for tomorrow and the sometimes messy reality of today. And you can really see this pattern of delays when you look at full self-driving. Back in 2019, the promise was millions of robotaxis by 2020. Okay, fast forward to today, heading into 2025, and the reality is a small pilot program that still needs human drivers. For the bears, this consistent gap between the vision and the actual delivery is their single biggest worry. So we've seen both sides. We have the incredible blue sky potential on one hand and some very grounded real-world risks on the other.
So what's the ultimate takeaway for anyone looking at this stock? What does it all mean for you?
It really all comes down to this simple comparison. You've got two different Teslas you're looking at. The bull case is a bet on the promise of tomorrow, a future where Tesla is the undisputed king of AI and robotics. The bear case, though, is a judgment on the price of today, a valuation that just seems way too high based on its current business of selling cars in an increasingly crowded market. So the fundamental question you have to ask yourself isn't about spreadsheets or charts. It's really about what you believe. Are you buying the company as it exists today, the car company? Or are you betting on the company that's been promised for tomorrow, the AI and robotics giant? Your answer to that single question changes absolutely everything.